TGIF is all the way down there. All right. That is indeed the daily immediate rebalance right there. Alright, thank you guys so much for joining. Today's live stream is going to be November 8th, 2024. And yeah, coming into today, I don't really have much of a bias here. We took up previous day high already, which was going to be my higher time frame draw of liquidity. So with that in mind, I'm going to be trading with the lower time frames relative to the daily time frame. So instead of trading with the daily time frame objective, right, I'm going to be trading with using what the 4 hour is going to give me, what the 8 hour is going to give me, what the 6 hour is going to give me whenever those candles close. So for the morning objective here, I want to see how we close here on this 4 hour candle and 8 hour candle, and depending on if we can create a bullish candle or a bearish candle will tell me if we are going to be going lower in the morning or higher in the morning, just for the morning objective at least. Oh my gosh. It looks like we are disrespecting that 1 hour SIBI, if you guys can see it right here. Right here. If we can get a closure above it, I mean, if we get a candle closure above the 1 hour SIBI, that will tell me prices are bullish, and we're most likely going to take out that 4 hour high, this high right here, and we're probably going to take out the 8 hour high as well. So that's something that you want to keep in mind as well, trading for the morning objective at least. All right, let's take a look at what ES is doing here. I'm sorry about that. I'm trying to clean something. So yeah, okay, ES. We haven't taken out previous day high here yet on ES. So there is some sort of SMT here between NQ and ES. I would assume that we're probably going to take out. I would anticipate that we're going to take out the previous day high on ES at open. So at the 10 o'clock open, I do want to see us take out that high and not have an SMT between the markets. But let's just, like I said, let's just continue to watch. Continue to watch, not really enforce a will onto the markets here, but so NQ can continue higher if if ES hasn't taken out previous day high yet. So after ES takes out previous day high, I wouldn't force any longs on NQ because we're at all-time highs right now, which is you know, just something to be aware of. So pushing for higher prices right now isn't necessarily, or at least on the higher time frames, pushing for higher prices isn't as high probability, but yeah, I mean we haven't had SMT yet between the markets, so I would assume that we can still continue higher. Take a bit of cleaning. Now it's all shiny again. So let's take a look at what the lower time frames are doing here. So there's previous day high. Taking that out. Do want to see how we close here on this 30 or how we treat this hourly fair value gap. I would assume that we're probably going to just treat this as a as an inversion, to be honest, but let's see. And we're near actually we are also near the open too, so this is quite interesting. So there's a 15-minute buy side level here. Buy side liquidity. London high. So this 8-hour model is suggesting higher, 4-hour model is also suggesting higher. We could probably take this on the 15-minute model, to be honest, because this would be considered a expansion model, but I want to see how we close here actually on the hourly first. But yeah, I'm wondering if you guys have started to pick up on how I really see the markets here. It's very, very clear. I don't really do anything too special, to be honest. It's just power of 3, fair value gaps, and understanding time frame alignment. still waiting to see how we close here on this hourly time frame. We've taken out Asia's lows and highs. We've taken out London lows. So we've yet to take out London highs. Let's see if we can make one last attempt to continue higher here, and then probably maybe continue lower. Who knows? So depending on how we close here today will tell me if we're going to retrace back inside this daily fair value gap, and in next week how we treat this daily fair value gap will tell me if we're going to take out previous week's high or not. But yeah, the whole narrative actually like for me, I was anticipating from previous month's low to get taken, right? But notice we completely disrespected this daily fair value gap here, this bearish fair value gap here, and yeah, with the way that elections went, we just completely just shot up higher. On ES, it's a little bit of a different story though, because we did end up taking out previous month's low and previous week's low. So like I said, this monthly candle here and this weekly candle, they both suggested lower prices. After we completed that objective, we just shot up higher. We disrespected that daily fair value gap, and we just continued higher here. One thing I do want to note is that we did trade back inside the consequent encroachment of a weekly fair value gap here, and we continued higher. So we're still respecting this weekly fair value gap. And let's see where this actually. Well, we're very close to the open of that down close candle. But yeah, it makes sense for us to have continued higher there. It's a reasonable spot for this expansion higher. But cashing it is a different story. Monday we took out, completed the weekly objective, create the Monday low of the day, and I'm assuming probably we're going to create a Friday high of the day and probably get some sort of retracement back inside the range, which is why I drew out the TGIF little thing here. So what is TGIF? TGIF is essentially your trading. So notice how the weekly candle went. So this is the weekly open right here, right? Weekly open. We dipped lower during Monday, expanded during Tuesday, Wednesday, Thursday, and now Friday. I want to see us, after we create the high of the candle, right? What do we tend to do? We kind of tend to retrace back inside this range. How deep can we, retrace? TGIF, which is basically a retracement model. And there we go. So this 0.2 to 0.3 is essentially where prices tends to retrace back into. So let me show you guys what the monthly candle did last week or last month. Where did we close? This black line right here. And where is it between? We are in between the 0.2 to 0.3 of this dealing range. That's TGIF right there. It doesn't happen all the time, but it's a very common characteristic of the markets. But like I said, you want to see what the current objective is, right? So depending on, like I said, going back to it, depending on how we close here on this 4-hour and 8-hour candle will tell me if we are going to get a retracement back inside this dealing range. If not, then it's cool. And there is this swing high to the swing low, so we've yet to retrace back into some sort of discount yet. Discount level. So that is something that you could be watching for. ES is very close to taking out previous day high. Alright, so ES has taken out previous day high, and notice how there is a there is a SMT here between the markets. So we continued higher here on ES, and Q is not really playing catch up. So that's just something I am keeping in mind. Like I said, this isn't, it's not very high probability, to be honest here. I wouldn't force anything. Da-dum, 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 da-dum. 4 hour and 8 hour still suggesting higher prices. This is very, very interesting. Very, very interesting. Super duper interesting. Super duper interesting. Very, very interesting. Very, very interesting. So this 15-minute here is suggesting that we're going to continue higher, but notice how this 30-minute high, this 1 hour high, and this 4 hour high is a different high than the 15-minute high. Let me just go back. This is the 15-minute high. This is the 30-minute high. What is this suggesting? This is suggesting an expansion model. So I can anticipate for this next 15-minute candle to at least take out this 15-minute high and quite possibly expand higher to target the 15-minute high, or to target the 30-minute high. So with that in mind, I'm actually that could be a model. We still have about 4 minutes left till we close. So before that, I'm going to just get ready to put myself into the right spot for a trade. So the entry pattern could actually look something like this. Right? It could look something like this, because that would be considered an expansion model. Stop losses at that fair value gap, and yeah. Where is the, yep. So there is the daily open is right. We're actually trading below the daily open too, which is not bad. So like I said, 30-minute high, hourly high. Where is it at? Right here. We mark it out for a little bit clearer. 30-minute high, 1 hour high. So that's the expansion model. And like I said, I want to see how we close here on this 15-minute candle first before forcing anything. About 2 minutes left, 3 minutes left till we close here on the 15-minute. We still haven't completely disrespected this 1 minute fair value gap yet, so I would still use it as an entry pattern. Just waiting on how we close here. One minute left. A 1.5 minutes. I see. I'll be close. Very, very interesting. Super duper interesting. Depending on how we close out on this 15-minute will tell me if I'm even gonna take this model or not, to be honest with you. consumer sentiment is actually so yeah, 4 hours still suggesting higher prices. I would if we close above this 1 minute fair value gap, I'll take it. So we have to have a candle closure above this. There we go. That is quite the unfortunate circumstance, an unfortunate play there. Completed the 15-minute objective. So now, yeah, I would have moved stops to break even here. And probably would have got stopped out just now. Or not stopped out, but stopped at break even. Took off some contracts there. Unfortunate. Very, very unfortunate too. So let's see where ES is. So ES has completed its 15-minute objective. And Q, however, did complete its 15-minute objective, but still hasn't taken out its 4-hour objective yet. So now it's gonna be a little bit very interesting. Alright, I'm just gonna let the markets do its thing here. I'm not gonna force anything as of right now. For now, I'm gonna go over the pros and cons and some of the improvements here I could make this week to be just to be a overall grow as a trader, grow mentally, grow my develop my model and develop my mindset. I'll be right back. But wham! So we retrace back inside the discount of that dealing range there. Okay. Time down. CPI, PPI tomorrow. Or next week, I'm sorry. Interesting. I'm sorry. I'm eating right now. It's kind of like I'm just trying to finish my food before I start this presentation. All right. All right, let's get into it. So, the first positive here from the previous week was on October 28th. So let's take a look at where October 28th is. Okay. And the positive here is that I was able to, so understanding that there is no higher time frame objective, right? We're not taking out previous day high or previous day low or previous week's high or previous week's low. If there's no higher time frame objective here, I would be trading, I would only be looking at for the lower time frame objectives here, right? Which is why in this specific model, I am targeting a rebalance of this 30-minute fair value gap. Notice how we close here on this 30-minute candle, right? It's suggesting that we could continue higher. Why else are we going to continue higher here? To rebalance this 30-minute fair value gap. So that is the first positive here, is understanding that if there's no higher time frame objective, you're going to go on to the lower time frames to formulate some sort of lower time frame objective prices is fractal, right? So everything is done on the 30-minute as if it would be done on the daily time frame. To take liquidity, to generate liquidity, to rebalance inefficiencies, and to retrace back into discount and premium. And like I said, on the lower time frames, I'm targeting a rebalance of the 30-minute fair value gap. And you have to understand that once prices retraces that, rebalances that 30-minute fair value gap, you don't have that type of conviction, that confidence that of before. We don't know if prices is going to respect this 30-minute fair value gap or not. So not setting your target at previous day high after taking this lower time frame long model is good. If you had your target set at previous day high and your model is only suggesting that we're going to rebalance this 30-minute fair value gap, that makes no sense. So that's just something that you want to keep in mind whenever taking stuff like these. Second positive is understanding why we created a bullish or bearish power of 3. So why did we create that bearish candle? Why did we create that bullish candle? Is something that you want to ask yourself, right? And specifically here, on October 30th, we traded it back into, or we rebalanced back into a 30-minute fair value gap. After retracing back inside that 30-minute fair value gap, we created a bearish down close candle. So there's a reason why we created that down close candle. So now we can anticipate that next 30-minute candle to take out this 30-minute candle's low. And I'll show you guys what a EQ model is later on, but we're also retracing back inside the discount of this dealing range. So there's actually 3 reasons why prices wants to continue lower. Third thing is incorporating higher time frame objectives, right? So you're probably asking, can you list the objectives? So the objectives are retrace back into discount and premium, to rebalance inefficiencies, and to generate and take liquidity. So those are objectives. But because prices are so fractal, you will see those objectives on every single time frame. On the weekly, on the monthly, on the 1 minute, on the 15-minute, on every time frame there will be those objectives. And in this case, I want to require a higher time frame objective relative to the model that I'm taking. So if I'm taking a daily model, there should be a weekly rebalance of a fair value gap, or a weekly expansion model, or a weekly EQ model. Negatives here, or just stuff that I could do better, is just be a little bit more aggressive and being consistent with the models that I take. So improvements here. Some of the improvements here are, you want to be selective with the models that you take. You want to always require a higher time frame objective, and I already stated that all to you guys here, but you want to require at least one of these things to occur. And yeah. Second improvement here is, just like I said, being consistent with the models that you take. Third, being a little bit more aggressive. And last but not least, you want to be patient, allow the models to come to you. You don't want to force a thought onto the market, because that's not how it works. The market gives you information, you take that information, and you decide what you want to do with that. It's not you're imposing a will, you're forcing to see the markets in a way it's not supposed, it's in a way it's not presented. But yeah, that wraps it up for the pros and cons and the improvements here for next week. I do want to let's go over one of these trades from last week here. So in this specific model here, you can see that there's a dealing range here. So from this swing high to this swing low, right? The most significant swing high and swing low here. Prices, I drew up the I drew up the premium level, right? So in this specific model here, notice how this 30-minute candle closed. We had a bullish candle closure, right? We closed above a 30-minute fair value gap. And this 30-minute candle closure suggests that we could take out this 30-minute candle's high. However, on the 15-minute time frame, you're able to see a little bit more information. So on the 15-minute time frame, we created a 15-minute fair value gap, and the way we created the 15-minute fair value gap suggests is that we could retrace back into, or we could rebalance back into the 15-minute fair value gap. So you don't want to instantly take this model, right? You want to wait and see how we trade at this 15-minute fair value gap. So after prices dips into this 15-minute fair value gap, we create a bullish 15-minute candle, right? A 15-minute model. So my model here is going to be based off of this 15-minute closure. I'm going to anticipate that the next 15-minute candle is going to take out the 15-minute candle's high, and because the 30-minute candle is already suggesting higher prices, we could see an expansion even higher after taking out 15-minute high. So that is an expansion model. Here's the lower time frames for a better look, but we create this 1-minute fair value gap. We dip back inside the 1-minute fair value gap. We take out the 15-minute high, and notice how we instantly take out the 30-minute high as well. So that's known as an expansion model. But notice how we've yet to retrace back inside premium, right? This suggests that that we could actually continue to see higher prices after taking out 30-minute high, because we're still technically in discount. So yeah, I mean, there's three higher time, or there's 3 reasons why you want to see higher prices here. Is because first, initially that 15-minute model is already suggesting us to take out that 15-minute high. With the way we close on the 30-minute is suggesting that we could take out the 30-minute high, so there's another expansion there, and we haven't retraced back into the premium of this. We haven't retraced back into the premium of this dealing range, so you can still continue to see higher prices too, until we retrace back inside discount. But yeah, this would be considered an A+ setup for me. Very textbook. Yeah, that's about it for that, at least. The models here are looking a little bit ass, I'm not gonna lie, so I'm not gonna really pay attention to it too much. And yeah, I think that's gonna wrap it up for the pros and cons and improvements. Alright, so I did tell myself that I was going to go over the expansion model here with you guys. I'm sure you guys already got a glimpse of what an expansion model is, but I'm going to actually record this for YouTube, so I'm going to turn on my webcam here. Hopefully it turns on. Oh, I'm not too sure why it's not working. Alright, so alright, thank you guys so much for watching today's video. At the time of the recording, I am also live streaming. Today is November 8th, 2024, and I'm going to be explaining to you guys what an expansion model is. And yeah, let's get right into it. So you're probably asking yourself, dude, what is an expansion model? What are you talking about? Expanding. Well, an expansion model is essentially when the lower time frame model here, when the lower time frame model is in alignment with the higher time frame order flow. So if you guys have watched my previous videos explaining to you guys what power of 3 is in it and how I even trade, you guys will understand what it means by a 15-minute model. This is basically what I'm anticipating the next 15-minute candle to do. So it's going to be shown I'll show you guys an example. It's going to be a little bit clearer once I show you guys, but just be a little bit patient. But yeah, like I said, an expansion model is basically when the lower time frame model is in alignment with the higher time frame order flow. Meaning lower time frame is suggesting higher prices, and the higher time frame is also suggesting even higher prices. Even higher prices is the key word, or the key words here. And this could go both ways. Lower time frame suggesting lower prices, higher time frame suggesting even lower prices. So this is a vice versa type of thing. This model, you would want to take off about a third of your positions at the lower time frame model's target, but you want to leave the majority of your positions for the higher time frame objective, right? Because the higher time frame is also just suggesting even higher or even lower prices, and your lower time frame model must meet the requirements of an A+ setup. So understanding why did we create this power of 3? Is there time frame alignment between multiple time frames, and can we apply breakaway gap theory? So going into the examples of what an expansion model is, here is the first example. So take a look at how we created this weekly power of 3 here, right? This weekly candle closure. We created this weekly candle closure, right? This bullish weekly candle closure after trading into or rebalancing into a weekly fair value gap. Meaning there's a reason for us to have created this bullish weekly candle closure, and I'm anticipating for the next weekly candle to take out the previous week's high. So now going into the lower time frames relative to the weekly. So you don't want to go from weekly to 1 minute. You want to go from weekly to maybe daily, which is why I use the word relative. There should be proportions to it there. So I go from the weekly order flow to I went from the weekly order flow here onto the daily model. And the daily model here is suggesting that we could take out this daily high. And notice how this daily high here is different from the previous week's high. It's a little bit unclear, but the daily high is different than the weekly high. So now I'm going to try to find an entry pattern to target the daily high and the previous week's high, right? On the lower time frames relative to the daily, there is a 4-hour time frame, or there's a 4-hour fair value gap. I'm going to take the trade whenever prices trades back inside this 4-hour fair value gap, and I'm going to target previous day high, which is my first objective, but my overall objective is for us to take out previous week's high. Here is the hourly time frame just to see a little bit clearer, but prices dips below the weekly open, which is where I set my entry at, which is within a 4-hour fair value gap. I take my entry at the weekly open. I'm targeting previous day high and previous week's high, and you guys can see it a little bit clearer here, but previous day high and previous week's high are completely different highs. That is an expansion model. So some key takeaways here is notice how the weekly candle was already suggesting higher prices, right? So that means we can anticipate for previous week's high to be taken. But I'm basing the model here based off of the daily time frame. So that means that I'm aligning the daily model with the higher time frame with the weekly order flow. So like I said before, after we take out previous day high, I want to continue to set more I want to leave positions for us to take out previous week's high because it's an expansion model. It's expanding in a certain direction. Yeah, bye bye, bye bye. And key thing is, notice how the previous week's high and previous day high are completely different highs. This is the key component of an expansion model. This is essentially what makes an expansion model an expansion model. And the entry is based off of a lower time frame relative to the daily model. So I'm not basing my entry model or my entry pattern off of the 1 minute when I'm taking a daily model. You gotta understand that there's time frame alignment there. You can't go from daily to 1 minute. You gotta break it down into pieces. And I still haven't really completely figured that part out yet, is breaking up the time frames into different like intervals. But I just know that you can't go from daily to 1 minute. That, like, I've seen that happen, or I've seen people just go from, monthly objective straight onto the 1 minute, and try to find a entry model for it. There's no correlation there. You want to notice, keep in mind that I'm buying below the weekly open, right? So because I'm anticipating for that next weekly candle to be a open, low, high close candle, an up close candle, you want to be a buyer below the open, which I am. I'm buying legit at the weekly open. And not only is that weekly open, not only am I buying below the weekly open, but I'm buying inside a price structure that suggests high prices, which is that 4-hour fair value gap. I went from weekly order flow to a daily model to a 4-hour fair value gap for an entry pattern. So that's very key there. And here I have a bunch of I have some more examples of an expansion model, but it's basically the same concept. Here, the model I'm taking is based off of a 15-minute model. But notice how this 30-minute candle and this hourly candle is suggesting even lower prices. So the 15-minute low is completely different from the 30-minute and the hourly low. The hourly and the 30-minute low is suggesting that after we take out the 15-minute low, we could continue even lower. So hopefully, it's starting to, you guys are starting to grasp that concept. But so now that I'm taking a model based off of this 15-minute time frame, right? I'm going onto a lower time frame relative to the 15-minute. So now, if I'm taking my model off of a 15-minute, right? 15-minute candle, am I going to take an entry pattern on the 4-hour time frame? I don't even think that's possible. But 15-minute, you want to go on to like the 1 minute, the 2 minute, 3 minute, 4 minute, 5 minute. So now on the lower time frames, I go on to the 2 minute time frame, and there's a 2 minute fair value gap, and I use it as an entry pattern to target the 15-minute low. And notice how the 30-minute low and the hourly low is completely separate from the 15-minute low. Expansion model. Prices trades up into the 2 minute fair value gap, takes out the 15-minute low. After we take out 15-minute low, we take out the 30-minute low. That is an expansion model. Same things that's occurring almost every single day. It just depends it just depends on how your rules are, but yeah. Very, very nice. And I'm probably just gonna go over 2 examples here. I'm sure you guys have already understand or have fully grasped the idea, and if you guys haven't yet, then go shoot me a text on Discord. I have my Discord in my bio on YouTube. And yeah, thank you guys so much for watching, and until next time, peace out. So stream, how did you guys enjoy the explanation of what an expansion model was? Hopefully it's starting to click for you guys, because that's when trading actually clicked for me, was understanding power of 3, time frame alignment, and just knowing what the current objective is. Like even if like, let's say we close on this weekly candle right now, right? If we close on this weekly candle right now, I know that we can target the previous week's high, but on the majority of the time, you're probably going to be an intraday model or intraday trader, right? Can you target previous week's high, which is London highs here, by the way? If we don't take out previous London highs, this will turn into previous week's high. Are you going to take a long model right at this very instant to take out previous week's high? Just for like, just for an example. No. We are not suggesting that we're going to take out previous. You have to understand the current objective for prices. You can't force prices to take out previous week's high whenever the structure on the lower time frames relative to that is not suggesting it. It's completely suggesting a different idea, which is why sometimes you can short whenever we're in bullish conditions, or you can long whenever we're in bearish conditions on the higher time frames. You have to understand you have to understand the current objective. What is the current narrative? Higher time frame narrative and lower time frame narrative. If those are in alignment with each other, then you can get an expansion model. But if they're not, then you really do have to really hone in to the markets and understand, okay, what is the current objective on the weekly time frame? Well, the current objective on the weekly time frame is previous week's high. But what's the daily objective right now? Oh man, we just created a bearish daily candle, so we're probably going to take out previous day low. That's just something that you kind of want to drill into your head here. Yeah. And to be honest, I think I'm gonna probably call it a day for streaming here. Yeah, thank you guys so much for watching, and